This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, now let's try to create the trading plan for the gold market. Well guys, in the recent couple of weeks or even a recent month market shows the really significant bearish action, and mostly on the weekly time frame chart you could find at minimum 3 moments that point on potential weakness of the market. If you will read our weekly research you could get the more information, but shortly speaking, the first moment is that after the significant plunge down that in fact lasts for recent year, this retracement was just a 3-8 retracement after the significant move. Even if you take into consideration that market was here is really oversold as never, so that was really significant level of oversold, and that was only the 3-8 bounce on the weekly time frame chart. This really small bounce, taking into consideration the level where market has stopped, that was not just an oversold, that was all-time 3-8 support. So usually the normal condition market usually shows the greater bounce in such circumstances. Second moment is that market erased by the yesterday's price action, sorry, not yesterday's, the previous week action has erased the potential bullish stop grabber that have been formed here on the weekly time frame chart. Also, market has passed through the monthly pivot support one and through major 618 support from the whole move to the upside. So all these moments are bearish. And take a look what has happened on the previous week. Really significant move down, and the market has closed almost right at the low price of the previous week, has passed through these lows and has reached the minor ABCD target. Our next nearest target will be that lows, 1180, the previous lows on the monthly on the weekly time frame chart. And market has not bad chances to reach it because currently trends on all time frame charts, on the monthly time frame, on the weekly time frame, and here on daily stands on bearish side. Market is not oversold on any of the time frame. And what is more significant is that market has passed through the major support. This will significantly increase the chances that we will get, in fact, not just the 618 target of this ABCD, but we could get really in reality the full ABCD down to the right 1180 area. So you can see that this ABCD stands particularly right at the lows around 1180s. Also take a look how harmonic the ABCD action. So the speed of these legs currently are the same. That was the perfect 618 retracement. You can see that 30 and 60. The 618 level of that move down. This was the 618 retracement. And now market has passed through these lows and accomplished this 618 target. So in the current circumstances, I think that we should search possibility for taking the short position, but I'm not sure that market will show us the potential for the retracement to any meaningful level. To keep overall setup as bearishness as it stands right now, I prefer to see retracement right to that area, not more, because this will be no questions to the bearish setup. By retracement to this area, market will simultaneously test the weekly pivot resistance one nearest 1285 Fib resistance and retest this trend line. This will be some sort of the retesting of the broken trend line. This low has no significant meaning as, for instance, this one, because that just was reaction on the major 618 support of the whole move up. So that market hit it, first shows the reaction retracement after it, and returns right back and continue move down. That's not really very significant. it is significant, but not as this level. That's why if the market will slightly move higher than this level, it will not be very significant, and this will not be some kind of the fake breakout or something of that sort. Also, that will not be a strategy if market will continue move even to this confidence resistance, 1312, 1314 area. That will be also the daily overbought. Theoretically, that could happen, and that will not be the strategy, and market still will keep chances to continue move lower. But taking into consideration all significant strength of the bears that we could find on the weekly time frame, taking into consideration that it's just a minor target and market in fact not ever sold, I prefer to see small retracement, because that will be a bit too extended. That will just add some nervosity. It makes investors nervous, since market will pass through the weekly pivot resistance one. That's not very good sign, and always it's a bit a sign that makes investor nervous, because market when the market will not stop at the level that become in fact and works as the edge between the retracement and between the possible trend. So the market will pass through it to the upside. This always become the risk that some trend could start to the upside, and we do not want to see it. That's why our retracement right to this area will be just perfect. Also, guys, I can't say that we will get any retracement at all, because by the same reasons market just could continue move to the downside. We could see it in reality. So that's why still, if retracement will happen, I offer you to work out with the plan that we just have created, was keeping an eye on this 1285 area as the potential entry point. But if retracement will not happen, we will try to take the position somewhere between this level and that level. Maybe market will show some bounce up that we will try to use with the possess ourselves right to these lows. On the 4-hourly time frame chart, in fact, I did not see much information, only the sign that confirms the strength of the bears, because from the one point of view on the surface we have this potential bullish butterfly, it's butterfly buy. But if you'll take a look at the right wing, that was even the 3-8 retracement of that move. It's very small right wing of the butterfly. Take a look how market has accomplished this butterfly, how it has reached the target. That was really significant plunge, some acceleration right to the target. That's the weakness, sign of weakness of this butterfly, and that butterfly is usually treated by the traders as not as reliable. As clear butterfly with the normal retracement here and with gradual move to the target. Any acceleration right to the butterfly's target makes investors worry. Makes traders worry. That's not good sign for the butterfly. Butterfly now has more chances to fail, particularly due to this acceleration. That's not the good sign. Also, take a look how market behaves around the target. It seems like somebody put something heavy on the price. Market can't even show the minor bounce from the target of the butterfly. Combining this action with the MACD predictor makes us think that this could be in fact the bearish pressure, dynamic pressure, because trend has shifted bullish, but take a look at the price action, in fact stands flat. So I'm not very sure that a market really will show any significant reasonable bounce, especially to the 1285 as we suggested right here. But that's the first level that's really significant resistance, and this level is worth it of our attention for potential short entry. But again, as I said, if we will not get the bounce, well, in fact, in this case, we will have to prepare another trading plan on Tuesday with the searching possibility to take short position right on the way to the 1180s.